Good morning. Welcome to Stock Market Today. It's Wednesday, April 22nd, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today, where you can sign up for a free email where we get a lot of the great content for this show, as well as give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities finished lower in Tuesday's trading, adding to Monday's decline. All sectors were in the red, with tech and financials the big losers. Energy and defensive sectors did outperform. Treasuries were stronger with the curve flattening. The dollar gained against sterling, but was flat on the euro and yen crosses. Gold finished down about 30 basis points, and WTI crude for June delivery ended down 43.5% to $11.57 a barrel, the worst day on record. As we get to the desk this morning, though, a little bit of a reversal. Futures are up about 1.1% after yesterday's sell-off. Asian markets were mostly higher overnight. European markets are higher as well. Treasuries are weaker. The dollar is trading flat on the major crosses. Gold is up 2.1%, and WTI crude is down 20 basis points after that more than 40% fall yesterday. So taking a look at the structure of the S&P 500, we stalled out basically at the declining 50-day moving average. Initial support that we highlighted yesterday at 2730 did hold up. Should that give way, you have to start thinking about 2450 to 2600 as that range holds the key retracements of this move from the March 23rd low to last Friday's high. Resistance to the upside, should we get some traction, 2850 to 2900. We are leaving overbought territory in the near term based on that 13-period CCI. And Chaikin money flow is bullish. So indicators mixed, fading from the 50-day. We've laid out the support and resistance levels. Obviously, earnings season hot. It continues to play out. Texas Instruments reported last night and basically said that they're using their 2008 playbook as it relates to guidance and setting expectations. So expect to hear more of that. Expect to hear more companies pulling guidance. Let's take a look at our market in a minute now. What are we writing about in the note today to Chaikin Analytics clients? Well, we pulled back from key resistance levels, whether they're price-based resistance levels, whether they're moving averages. All three of the major market ETFs have pulled back from key upside resistance level. The oil crash continued as demand decreases. I mean, really, you can cut supply all you want, take 10 million barrels a day out of the system. When demand destruction equates to something to the order of 3 times that, you're going to get lower oil prices, and we just have nowhere to put it. Hence the contract trading negative a couple of days ago. Small cap value is a laggard, right? If we are favorable on large cap growth, let's look at the other end of the spectrum, and you can see that our model lines up with our views. Sentiment metrics are mixed this week. The VIX does remain elevated. Futures do point to a higher open here today. Taking a look at the major indices now from a power bar perspective, some deterioration yesterday. Dow loses 2.7%, 2 bulls to 9 bears there. S&P 500 down nearly 3%, 26 to 163 bulls to bears. NASDAQ was an underperformer yesterday. They came for the growth stocks yesterday. Some of the leaders, some profit taking in those names. NASDAQ down 3.7%, 14 to 29 bulls to bears. Small caps were a slight outperformer, 152 to 398. Bonds were the big play, though. Flight to safety sent bonds higher, yields lower, according to the Chaikin Power Bar. Large cap stocks and small cap stocks are strongly bearish. Taking a look at our stock of the day now, not auto-generated. I'm picking it because they reported results last night. Netflix, I want to take a look at it. We get a lot of questions about Netflix. It does have a neutral Chaikin Power Gauge rating, but a strong trend and a strong industry group. Remember what I say about relative strength, right? The stocks that have tended to hold up the best through the downturn tend to see some big reversals and the start of new trends. And Netflix certainly fit that bill, right? Outperformed during the sell-off, snapped back, and is now broken out, right? You have this breakout through the 390 level, call it, and then continuation to the upside. Bit of a consolidation here. Obviously, expectations were extremely elevated after this strong move, and the stock actually holds in after their report. So that's an encouraging sign. We'd love to see Netflix kind of chop around here sideways, work off this oversold condition. Money flow is bullish, relative strength is there. I mean, you know, I look at neutral stocks as long as the relative strength is there, and that is the case for Netflix. Would love to see a consolidation that works off this oversold condition following the earnings announcement, but Netflix is a good-looking stock in this environment. Expectations were elevated. The print was, I'd say, it probably met expectations, and the stock is flat to down slightly here in the pre-market. Taking a look at our sector tracker now. Movement in the major sectors over the last 5 days, and you get a couple of decent-sized sell-offs, and everything turns negative, right? So let's look at the relative. Healthcare at the top of the list, where it has been for the past few days, one of our favorite groups. Discretionary, thank you, Amazon, holding the number 2 slot. Remember, Amazon is a huge weight in the XLY. Comm services getting a lift from names like Netflix in the number 3 spot, and then you have your defensive staples in number 4. Industrials, energy, tech, and utilities are middle of the road. Financials, materials, and REITs are at the bottom of the list. REITs remain under pressure, a very bifurcated group there. You really have to dig in. You can't just blindly say, well, I'm nervous or cautious on the market, so I'm going to own REITs because they're traditionally defensive. You have to drill down on the REITs. I mean, you probably don't want to own mall REITs. You probably don't want to own senior living REITs. You probably commercial real estate. Who knows what that could look like coming out of this crisis. So materials, part of the reflation trade or lack thereof, and financials have the headwind of falling interest rates. Now, our industry in focus today, semiconductor services, which has been a bright spot over the past 6 months, outperforming the S&P 500 by nearly 6%. However, the power bar ratio is very weak, 0 bulls to 12 bears there, and it's currently ranked number 19 of 21 subsectors, moving down 4 slots over the past week. So again, stock selection is going to be really important here. You want to avoid the very bearish names like Impinj, PI, Silicon Labs, SLAB, and Xilinx, XLNX all have very bearish ratings. I will say that Impinj is tied to the retail space with some of the products that they have for around RFID. So just something to keep in mind. You have to know who your end markets are when you're looking at some of these stocks, right? It was easy when semis were rallying, when the market was rallying, to just kind of own semis. Now you actually have to take a look, right? Different semiconductor companies sell into different end markets, and you're going to want to be aware of what those end markets are as you do your work. Taking a look at the chart now, neutral plus ETF rating for a weak trend below the declining trend line. Now, we are seeing outperformance with bullish money flow, but it's overbought here in the near term. We'll see if it can hold here with the 21-day moving average. Really kind of a similar tale across markets, right? Whether you're looking long-term, right? This could easily be the SPY chart, right? Whether you're looking long-term, the trend is down, right? Below a declining long-term trend line. But short-term, right? 21-day moving average, or if you go even shorter, an 8-day moving average, that trend is up. So it really speaks to the importance of knowing your time frame, knowing who you are as a trader or an investor. In the short term, your trend is higher. In the longer to intermediate term, your trend is lower. And if you carve out portions of your portfolio to trade both sides, it's still important to know who you are. The long-term investment portion, your trend is down, right? No two ways about it. Below declining trend lines for your time frame means that the trend is down. Above rising trend lines for your time frame means that the trend is up. Speaking of trending, or yesterday's S&P 500 movers and shakers, our gainers and losers. A lot of weak names on the gainers board yesterday. Helmerich and Payne up 4.88%. A little actually surprising to see that given the carnage in oil, but we're going to talk about that a little bit later on in the show. Fleer seeing some follow through after their order from Amazon. Remember, Amazon said that they were going to use thermometers, thermal testing of their employees for their temperatures. Fleer sells that product. Follows through yesterday, right? It was up 14% the previous day, up another 4% yesterday. EFX reports earnings, stock higher by 3.36%. PXD, another energy stock, up 3% yesterday. And DRI, they did price an equity offering. Stock has a bearish rating. They did give an update on their business, up 2.5% yesterday. Now, remember what I said about the growth stocks, some of the leaders getting hit. Fortinet was the poster child for that yesterday, down nearly 10%, ticker FTNT. HWM must be a newer stock. We don't rate it just yet, down 9%. Didn't see anything company specific to drive trading in that name. Lam Research, part of that semiconductor group, 8.66% to the downside. Nothing company specific that I could see driving trading there. Freeport McMoran, obviously an economically sensitive stock, down 7.61%. Salesforce.com, right, part of that list of growth names that got hit yesterday. That stock down 7.5% on the day. Let's dive into the charts. Wednesday, we do sentiment on Wednesdays, and taking a look at the top of the chart, the CBOE equity put call ratio back within the range of kind of what is quote unquote normal after two extreme readings, right? First, extremely bullish as the market was topping out, and then extremely bearish as the market bottomed on March 23rd. We're now back in the middle of the range, kind of moving towards the towards the greed side of the equation. But basically what I'd say is we've left extreme conditions and returned to a level of more normalcy, at least by this indicator. The VIX, on the other hand, is still elevated, right? Still pointing to higher levels and fear than normal in the marketplace, right? Just going back over the past 5 years, the VIX is still above some of the peaks that we've seen over the past 5 years and actually moved higher yesterday. So with the VIX at about 45, if you want to get a gauge for what that means or what investors' expectations are in the market, take that VIX number, right, a measure of volatility, and divide it by 16. If you divide that number by 16, you're going to get something roughly in the area of 2.7, 2.8, right? That is essentially the percentage move that investors are pricing into the market currently. That means that they think the S&P 500 is likely to move about 2.7, 2.8% per day, right? The number to approximate that, divide the VIX by 16. 16 comes from the being roughly the square root of 252. So the 252 trading days in a year. So to kind of get the average one-day move, we take the square root of that number. It's a function of the options formulas, and you get roughly 16. So 45 divided by 16, you get roughly a 2.8% move priced into the market on a daily basis by investors based on the VIX. Now, energy, I said we touch on this because energy is actually holding up. Energy stocks, that is, are actually holding up as oil craters, right? Energy has rebounded off the lows with the rest of the market and now has faded over the past few days with the rest of the market, but 20 and 40% moves to the downside. The front month contract trading negative, right? Here's a blend of WTI, various contracts down here at $11, breaking below support, precipitously declining since the start of the year. Folks, we were over 60 at the start of the year. But energy stocks are actually holding up. Now, this is kind of interesting to me. Now, I'm not ready to say I want to own energy, right? It's still bearish fund here at Chaikin Analytics, 0 bulls, 12 bears. But check out XLE relative to the SPY, actually making a higher low here. Still early days, obviously, but I find that interesting, right? Your kind of initial reaction, if I told you oil went negative, would probably be, well, energy stocks are getting crushed. Well, not the case. I mean, S&P 500 was down almost 3% yesterday. Energy was down 1.95%. Something I'm keeping an eye on. I'm not exactly ready to say, let's buy energy yet, but something worth keeping an eye on here in the near term. That being said, energy is now about 3% of the S&P 500, so fewer and fewer people are actually going to start caring. We'll wrap it up with small cap value. IJS, the fund here, S&P small cap 600 value ETF. What I notice here is that it didn't even retrace the 38.2% of the move. Bearish ETF rating, bearish power bar ratio, exited overbought conditions, really underperforming relative to the broader market. So from a trend perspective, I continue to favor growth over value. I continue to favor large cap over small cap. And you can see it here with a bearish rating for small cap value in our model at Chaikin Analytics. That'll wrap us up for today. Head over to chaikinanalytics.com/test drive. Sign up for a free 14-day trial. Have a great Wednesday. I'll be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.